morning, everyone. Somebody asked me yesterday whether I feel more stress for Investor Day or for conventions like that, and the answer to that is not even close. Convention's way more stressful than Investor Day is, but it's also a lot of fun and really a wonderful opportunity for us to be together with our sales leaders from around the world. And this convention was just energy-filled and just really a remarkable experience for us and for all those who were able to attend. We have a lot of slides to cover today, and so I'm going to get us started and run through them quickly. We want to thank you all for being here this morning. We have the opportunity in 2014 and for several years after that to do something really special as a company and special within the anti-aging industry and within the direct selling world. The question, I think, that is on everyone's mind is how does Nu Skin manage to sustain rapid growth rates? And over the last several years, as you know, even an accelerated growth rate. So while it's very difficult to grow, north of 50% every year on a local currency basis, we are comfortable that we can sustain a rapid rate of growth for the foreseeable future, and we want to explain why. First, we'll do, as we always do, a little bit of an accountability report on what we represented for 2013 in all of our financial metrics. And I think along the way, help you understand why we're confident that we can continue to grow going forward. Last year, we guided to 7 to 9% revenue growth, and we obviously exceeded that number. There are a couple of reasons for that. One is that you'll recall that when we guided at this event last year, we guided to a $300 million number in terms of size of our product launch LTO this fall. We surpassed that by a wide margin, as you know, with sales north of $550 million. And we also guided China to be growing at a 15 to 18% rate on the top line. We've obviously exceeded that growth rate in China, and those are really the two factors that put us where we are, local currency growth north of 50%. We are very happy to be able to point to a chart that looks like this one, which shows now a compounded annual growth rate of over 20% on a 5-year basis. I don't know. Those of you who study more companies than I do, maybe you see charts that look like this, but I think there are probably very few companies that can put up a growth chart that is as impressive as this one. And we continue to believe that it's going to get increasingly more impressive. Our growth is happening everywhere. While it's true that Greater China is enjoying a greater growth rate than other markets, we are nevertheless growing at a robust rate in many markets. South Korea just remains an all-star market for us. All over Southeast Asia Pacific, actually, many markets growing at very healthy rates. The Americas at 22% plus is a number that we're not embarrassed about. And MEA was our slowest region in 2013. But we're seeing good things there, and we expect the growth rate there to pick up. From a profitability standpoint, we obviously surpassed our original guidance also by a wide margin, 65% growth rate in EPS. Not something to be embarrassed about, obviously. And as we look at that metric on a longer-term basis, we're also very proud of our track record on this front. Rich is going to go into some detail on all of these financial metrics in his part of the presentation, but I wanted to just say on this slide that we are firm believers in the benefits and the dynamics of performance-based equity incentives. When we first implemented performance-based equity incentives back in 2008, was it, Rich? 2007, when we put our $2 target in place, we saw mentality change. And we've had board support for re-upping that, as you know, with a $4 equity incentive, EPS incentive, which we hit this year, and now extended yet another one that will provide incentives at $6, $8, $10, and $12 per share. So we love what performance-based incentives do for us as a management team and within our corporate culture. From an operating margin perspective, we obviously surpassed our target again by a wide margin. That's a function of surpassing our revenue guidance also by a wide margin. And I'm going to let Rich delve into that topic a little more here going into his presentation. Our growth is a reflection of a growing sales force and a growing consumer base globally. with our active accounts, or those, again, who are primarily consumers, stretching now to nearly 1.3 million around the world, and our sales leader number stretching to about 100,000 sales leaders around the world, numbers that we're very pleased with and I think just are reflective of the momentum that we're enjoying in our business. Now, I personally like showing the street this chart, which reflects our revenue since inception. So our company was born in 1984, and I like a couple things about this chart. Number one is that, as you can see from it, we haven't always enjoyed years of growth. There have been moments in time when growth slows for whatever reason, and various reasons. But one thing that Nu Skin's done better than other companies in the direct selling world is figure out how to continually renew the vibrancy of the business opportunity that we offer and the appeal of the products that we offer. That really is at the core of our success and at the core of our ability to sustain growth. You'll also note in this chart that things took a turn for the better, a significant turn for the better, back in 2006, when we had suffered a little decline in our revenue and took a very serious look at the way we're executing the business, began a transformation process that was traumatic. We actually shed nearly a third of our employees globally in 2006, 2007, 2008, put in place mechanisms like the equity incentive program that we just discussed, aligned our management team around a common vision of how we were going to grow the business, got people who didn't share that mentality off the bus, or people in the right seats on the bus, and it made a difference. It worked. We've enjoyed accelerating growth ever since that point in time. We sustain growth because we have systematized our approach to growth. You're going to hear us talk today a lot about this notion of a 2-year business cycle. This has been critical to our success. We're fiercely proud of our product innovation and the products that we offer. But if I were to point to one thing that really explains why our growth has accelerated over the course of the last few years, and of course China's a big part of that, but we're doing a much better job of simply executing the business around this 2-year business cycle. And in fact, we are 1 year into our current business cycle, as Dan Chard will explain here in a minute. The key components of our business cycle are product and channel innovation. We strive to innovate on both fronts, and both forms of innovation are extremely important to us. I think we're one of the few companies that has branded not only a product line per se, which is what ageLOC is, but ageLOC is more than that. ageLOC is an approach to product development. It's a scientific basis for how we develop new products. It's landscape-changing innovation. Okay, this is not 18 new shades of lipstick, which is some people's form of innovation. This is landscape-changing, anti-aging innovation. That's what we strive to do. Using the ageLOC banner and the ageLOC brand has simplified our ability to tell this story to our sales force, and then for them to repeat that story to consumers and to potential salespeople. It's a differentiated product platform, and I think a unique approach to messaging that really should not be forgotten. We continue to believe that we're on the right path here with respect to moving forward in the world of anti-aging. Since we first started talking about gene expression and measuring the impact of our products, whether ingested or whether applied topically, on gene expression, we have seen the world follow. We're seeing a number of companies now starting to talk about this approach to developing anti-aging products, and we just happen to enjoy some unique resources in our LifeGen partner and recent acquisition, and we also enjoy a huge head start in this area. LifeGen has been studying gene expression now for 30 years, and Joe Chang is going to explain a little more in his section what we get out of that relationship and how it enables us to continue to differentiate ourselves. We're also one of the few anti-aging companies and one of the few direct selling companies that has succeeded in creating substance and brand equity on both fronts of the anti-aging battle. We just have never believed that you can fight anti-aging just from the inside or fight aging just from the inside or just from the outside. We're one of the few companies that has successfully built brand substance and success on both sides of this equation, and we think that that's a significant differentiator and an important one going forward. We have recently now moved into, actually about 6 weeks ago, we moved into our new building attached to our headquarters in downtown Provo. We call it the Nu Skin Innovation Center. It's the home of the Nu Skin Center for Anti-Aging Research. Joe and his team of scientists are delighted to now be in a world-class facility, which will play an important role for us going forward as we attract world-class scientists. And perhaps even more importantly, it's just a nice reflection of our brand. I mean, we really look at this as an investment in our brand as much as an investment in the future. It's a stunning facility. In fact, that's the word that I most often hear when people tour it is, this is stunning. And it is stunning. It's beautiful. In fact, we brought a little video that we want to show you to give you a glimpse at the inside of this facility.